companies seem hard to understand, but have characteristics so attractive that we just want to learn more about them. That's how I feel about FS Investment Corporation. I think it's one of these kinds of companies. Why are we interested? First, it's a $10 stock. I know you like those. It yields 8.5%. That's what I like. That attracts my attention. Second, it's what's known as a business development company that lends money to businesses that might not normally get loans from traditional lenders. Third and finally, FS Investment Corporation is a company that just came public in the spring, and we know very little about it. So without further ado, please welcome Michael Foreman, Chairman and CEO of FS Investment Corp, who can tell us how his company works and why it might be right for the yield seekers out there. Michael, how are you? Have a seat. Thank you. Okay, so we haven't had a business development company come on, and I think that our viewers need to be educated about it, and yours is pretty much a classic one. Can you describe why you're different from a bank, why you're different from a broker, and why you're different from almost any other organization out there?
Right. Well, business development companies are creatures of the 40 Act, so they're enabled under the 1940 Act like mutual funds. The statute created BDCs in 1960. So they've been around for a long time, but it's just recently that you've seen a real proliferation of BDCs. And what BDCs tend to be is middle market lenders, providing capital.
Middle market, meaning people might not understand that term, middle market.
The BDCs lend like a bank to U.S. companies. So we're providing capital to mom and pop, $50 to $100 million net income companies. Lots of different BDCs. There's about 50 different business development companies now. And we at Franklin Square are the largest sponsor of business development companies. We have about $13 billion of assets under management. We've been in the business since 2009. Okay. So the fund that we listed in April of 2014 was our first fund called FS Investment Corp.
There will be other Franklin Square Capital's parent, I guess, funds to come after this?
Yes, like you, we look at leveling the playing field. Our mission is bringing best-in-class alternatives to mainstream investors. We want to give mainstream investors the opportunity to invest like the big guys. So we provide asset classes, managers to mainstream America that typically only large institutions had access to. So our clients have the opportunity to invest like Harvard or Yale or the big pension funds as sovereign wealth funds, providing them unique income streams, unique assets, and managers. In our 5 funds, and we have 5 funds, our partner is GSO Blackstone. GSO is the credit platform for the Blackstone Group. GSO manages about $70 billion of institutional assets. So we're providing our clients with access to a true best-in-class institutional manager.
Okay, so a lot of people will say to me, Jim, 8% yield at a time when such low interest rates, what's the catch, so to speak?
I don't really think there's any catch. At Franklin Square, we really focus on delivering performance. We try to provide institutional level transparency, performance, best practices. Since inception, we're up 15% on an annualized basis. So we've had terrific performance, and it's really because of the institutional approach we take. GSO and we have built a very big lending platform. So it's a time when banks are struggling a little bit. There's enhanced regulation. They're required to have more capital on their balance sheet. So there's a little bit of a void in the marketplace. And we as a BDC fill that void. And we're what we call a direct lender, making loans to middle market American companies.
So if I own shares in FS, I own shares basically in what? In all these loans or in the company that manages the loans?
You have to think of FS like a mutual fund. So you own shares of that mutual fund. That mutual fund is then a lender to various companies.
Got it.
We have 140 loans in that portfolio. Okay. This is what we call the leveraged credit space.
Right.
So these are non-investment grade companies which look to us to be their principal lender. And as a result, we kind of take advantage of the illiquidity premium and yield about 8.5% currently.
Last question. If interest rates were to suddenly spike higher, I have to believe that people would be worried about a company like a business development company,
and that's a great question. Now, people look to us as actually a hedge against rising interest rates and inflation. We are indexed to 90-day LIBOR, so most of our assets are floating rate. Okay. So we've done just fine in a historically low interest rate environment. In a rising interest rate environment, we'll do much better. So we're looking for, that's a great environment for us as rates go up.
That's terrific to know. I hope you guys have learned it. I'm learning, too, about this. Sometimes we have to just have me interview with someone who is a senior person at one of these business development corporations, and we can learn about it. That's Michael Foreman, Chairman and CEO of FS Investment Corp. Do your homework, take a look at it. You'll know some of the companies they invest in, and 8.5% yield could interest you. Stay with Cramer.